Yeah. Okay. One quick question about back to the ACORN account. So,
Yeah.
I know you said cut my losses. When you're saying cut my losses, are you saying quit putting money into it and just let it grow
No.
on its own?
What I mean by
or just take the money out?
what I mean by cut my losses is, for example, when I say losses, right? And you only lose money on investment when you sell it, right?
Yeah.
Because basically in this case, even if you're positive, you're gonna have like a loss in cash flow, because basically you'll have taxes due, right?
Yeah. Yeah.
On the profit. If you have a loss on it, then obviously you'll have losses. You have negative capital gains. So that's the whole idea. So when I say cut your losses, I mean you sell everything, you close the account,
Okay.
basically. You grab that money and transfer it over to what you're going to be doing now, which is either the 529 account for your kids or into your taxable account. But you personally, Rick, you shouldn't have a taxable account, because with your current income, you don't make enough money to fully max out a 401k and a Roth IRA. Does that make sense? Because the 401k is around $19,500, and then the Roth is $6,000. So together, that's around like what, like $26,000, $27,000. So you don't make that much. You're not going to invest half of your income, obviously. So you're able to just say, okay, if my employer says I'm going to give you a 5% match of your salary per year, I'm going to invest the maximum amount of money to get the full match. If I still have leftover money from my 10 to 20% money that I put aside for investing, I'll use that money to invest it fully into my Roth IRA. Tommy, why don't I just put all the money into my 401k and call it a day? Because basically, if your employer doesn't have, for example, a Roth 401k, the idea is that you're putting your pre-tax money in there, which means once you turn 57 years old, 57 and a half, if I'm not mistaken here, you will be required to start taking money out, if I'm not mistaken here, right? And you'll be taxed on that money because it's pre-tax, meaning you don't pay taxes today, you'll pay in the end. But if you have the bulk of your money, for example, into your Roth IRA, that money is fully yours and you'll never be taxed on it. And it also grows tax-free. Make sense?
Yeah.
So the difference is, for example, let's say 10 years from now, you have $1 million in a pre-tax account and $1 million in a post-tax account, right? They're both for retirement though. The one that's the Roth option, post-tax, you pay taxes first, that $1 million is fully yours. The one with $1 million that's pre-tax, meaning you never pay taxes on it, only now, you'll have, for example, $700K or $800K, because now the taxes are due. Make sense?
Yeah.
So that's why I prefer to put the bulk of my money, for example, into the Roth. But I also don't want to leave the money on the table if my employer is giving me a match. By the way, is your employer offering you a match, Rick?
Yeah, they giving us 8%. They giving us an 8% match. And so I'm doing 8% too.
Okay, so you gotta ask them. Yeah, so you gotta ask them, right? You ask them this question: how much money do I have to invest to get the maximum match that you guys offer? Well, Rick, just invest 8%, 10% of your salary, and you got the max match. Great. Invest that. The rest of your money, you put into your Roth IRA. Boom. Make sense?
Yeah. Because that's what I'm doing. That's what I'm doing at my first job. I'm maxing out, and so basically, what I'm bringing home, you're just telling me to take that money and start pumping that into a Roth.
Yeah,
IRA.
but remember, right? Remember, Rick, right?
Extra.
Yeah, remember, right? You have a budget here. The budget is for investing, you're doing 10 to 20%, right?
Yeah.
Pick a number, you do 20%, okay, great. So out of that 20%, whenever you get paid, for example, $4,000 between, well, I'll use your money, $2,500 multiplied by 20%, I know I have $500 for investing. So I'm gonna go ahead and invest, for example, the amount of money I need to invest per month to get the maximum match at the end of the year for my company. Whatever money is left over from the $500 budget, I put it into my Roth IRA. It's still the same 20%, okay? Because your limit is $500 for investing every single month. Make sense?
Yeah.
There you go. That's the core idea. And then if you want to get into investing into like retirement accounts for your kids, that's fine also. Not retirement accounts. I mean the college accounts.
You've got to stop.